Today we have some important things to speak about. What is happening, investors? It is your boy Jack. I am not a financial advisor. I have the clothing line to prove that fact, and it goes without saying the market's not looking too hot right now. And when I say the market, I'm specifically referring to growth stocks. Every growth stock investor is feeling the pain right now, and that is what I want to cover in today's video. So you'll see I have lucid tracking up in front of me. We can see that ARK Invest went ahead and had some very considerable sells along with some decent buys, but this is definitely more selling than we see from usual, and there's a lot of familiar names in there and there's a lot of growth in there. So why now? Why are they selling after a lot of these stocks are already down absolutely massively? And you know, these aren't small sells in some cases. So we're going to take a little look at what ARK Invest is doing. We're going to speak about a few things just about hedge funds in general. A title here comes the squeeze. Goldman Prime says hedge funds shorted tech for 9 of the past 10 days. Nasdaq 100 prime for a short squeeze as funds shorting intensifies. Hedge fund selling hits a record as flows echo extreme levels of August. And hedge funds and professional money managers keep selling stock. So what does this mean for us everyday retail investor who just wants to make some long-term money? That is what we're going to speak about in today's video, my friends. So right before we do get into it, before we get into the juicy information, can I please ask you to hit that juicy like button? Drop me a comment down below. I'm interested. What are you doing with your portfolio right now? Are you holding? Are you building your positions while these companies are cheaper? And please, my friend, if you are indeed new around here, hit that juicy red subscribe button and join the family of investors. Also, if you're interested in joining my private Discord group, that is the first link in the description, my friends. In there, you get access to all of my buy and sell alerts. We bought a couple of stocks this week. We're back on that buying hype. And if you'd like 2 free stocks on Webull, that's the second link in the description. So with that being said, let's just get straight into it. So I think before we look at what ARK Invest has been doing, look, you'll see there are some huge sells here. Fastly's in there, Baidu, Pinterest. You're going to see workhorses in there somewhere. CrowdStrike Holdings, Pure Storage, Deere & Co. There's a lot of different kinds of companies. Just look at this though. This first article I have open. Here comes the squeeze. Goldman Prime says hedge funds shorted tech for 9 of the past 10 days. So we can see from this chart here, the Nasdaq is performing absolutely terribly, especially in comparison to what it usually does. This graph right here says it all, okay? From Bank of America Securities. Record selling by hedge fund clients. Record selling. The 4-week average net flows from 2008 to present. There is more selling now than there was at the depths of 2008-2009. Literally the most selling we have seen since then. So it goes without saying, there's a lot of things being sold out here, and the hedge funds are shorting things such as tech, growth stocks, etc, etc. If you go have a look at 1 month industry performance, okay, you're going to see banks, ETFs for agriculture, steel producers, ETFs for energy. A lot of finance related things going on, commodities as well. I think everybody at this stage understands there's been this major rotation inside of the stock market itself from higher growth to, you know, some of these safer, more what were previously recovery stocks. I also think one contributing factor is the fact that a lot of people really got into these growth stocks over the last year when the crash happened. And a lot of those people have taken that money over to crypto. And I mean, crypto is doing absolutely insanely right now. And I would not be surprised if once the inevitable crypto crash is to hit, if we see a lot of that money get poured back into growth stocks again. But when you look at what is top performing as of right now, you can see that it's not really the retail investor that's pushing the markets as of right now. And we know that this can happen. Remember GameStop, remember things like that. Tech stocks were net sold for a 7th straight day. And more importantly, the bulk of this selling was short selling. Short sales outpacing long buys 2-to-1. So this way you're going to hear a lot of speak about short squeeze pretty much market wide going forwards. Simply put, the hedge funds are shorting absolutely everything that is out there, particularly the stuff that was very overbought, the stuff that was very overvalued. And when you look at things that are overvalued, you are going to find your growth stocks because that is where they sit. You're not going to so much be looking at Johnson & Johnson or dividend kings or aristocrats. That's not really what's going to be that overvalued to the extent where hedge funds can heavily manipulate it 60+% to the downside. Where that can be done is growth stocks with insane valuations. Why is it important to understand this and be aware that this is happening as of this moment in time? The last time we saw such a coordinated hedge fund selling was at the end of April when we noticed hedge funds sell stocks 7 out of the last 8 days. A move which these guys said would precede a major short squeeze, and sure enough in the days that followed, both the S&P and Nasdaq hit all-time highs. What needs to be understood about hedge funds is that they hedge their bets in both directions. They make money both in the downwards direction and the upwards direction. They make money from selling and from buying. And oftentimes when the price is in the process of being pushed down, they're actually buying shares on the way down. They're buying positions on the way down because they intend to bring the price back up at a later date. Simply put, the hedge funds can't just bring all of these prices down forever. A time will come where they will pump their money back in here, and with that the retail investors will also pump their money back in. As of right now, I think the market largely is a waiting game, and I think as bad as it feels right now to pour money into the market, it can be a good idea to build on some positions. Again, if you can take yourself simply back 2.5 or 3 months in time, people who are willing to spend, you know, in a lot of cases double on any given company than they are now. And for the large majority of these companies that have been hit 60 to 70%, a lot of fundamentals literally haven't changed for the worse whatsoever. Some of these companies have had good earnings in the meantime, come out with good news, and still are being held down by hedge funds. But we will get more into that and more into what I think I will be doing towards the end of the video. So when we have that information in mind, I think it's quite interesting to go and see what ARK invested just yesterday, May 6th, the market orders. Huge sell on BDU, on FSLY, PINS, SRPT. A lot of companies, a lot of people will be aware of. And we're seeing huge sells here. And with that, there is buys coming in. We see Twilio and Coinbase, they're being bought considerably. They loaded the boat yet again on SKILLZ. I just made a video about this, but you can see they are still buying, beating down growth stock. SKILLZ is down 65%. They sold some Apple. They're somewhat contributing to this hedge fund short fiasco. They sold some CrowdStrike, some Pure Storage, but they also bought some Twitter, some JD, some Roku, some Peloton, which was absolutely broken to pieces as well. They buy some 10x Genomics, a company they've always been buying. We see some DraftKings in there. Then we see they're selling Caterpillar. We see a huge Virgin Galactic sell, but we also see a huge NNDM buy. I'm interested to see what they do with some of these companies they've sold yesterday and more than likely over the next day or two in a week or two's time. Because this looks like more than just portfolio rebalancing to me. I mean, yeah, if you sell some shares, bring your percentages down 0.1, 0.2%, that's understandable. But some of these are huge sells. Look at that Virgin Galactic sell. I mean, that's a third of their position gone. I woke up to a couple of concerned messages about ARK Invest and their selling habits here. It's quite confusing, all honesty. There's no clear direction they're taking it. They're selling some blue chips, they're selling some growth, they're buying some blue chips, they're buying some growth, they're buying some booming industries, they're buying some very poor industries. They're doing a bit of everything. So I wouldn't be too concerned about some of the big sells that came from ARK. And I've seen this a few times over the past 6 months or so. Oftentimes these big sells happen and they do buy back in relatively soon. Keep in mind they're a actively managed fund. And one more thing I want to point out again from Bank of America. Their clients sold both single stocks and ETFs for the second consecutive week, with overall 4-week average flows near record lows and the lowest since mid-January. There is huge selling pressure right now, market-wide. They were net sellers to the amount of about $2.2 billion. So when we look at all that, what should we be doing right now as growth investors, as people who like, you know, large year-over-year returns? When you look at the S&P 500, the Nasdaq, the Dow, etc., they're all quite close to all-time highs. The market overall isn't in that terrible of a place. When you look at growth stocks, you know, the smaller to mid-cap stocks, a lot of them are going to be down anywhere from 20% all the way down to 60, 70%. If fundamentals have not changed and if valuations make sense, I think that's the most important thing to take into account here. We can, to an extent, justify high PE ratios and very high forward PE ratios for companies if they make sense, but they don't always make sense. So don't just go and look at these companies. Don't just ask yourself if fundamentals change. Ask yourselves if it makes sense to spend a certain amount on a share. And if it does, and if it's a company that you think is going to perform well over the next 3 to 5 years, would you have rather bought it for 100% more expensive 2.5 months ago or today? See, it hurts right now. We're all losing money in the short term, but it realistically could well be a blessing in disguise. I remember this exact scenario happening when people didn't buy last March and April after the huge crash. Stocks recovered at the snap of a fingers, and everybody says, I wish I put more money in. But at the time, it was gut-wrenching to do so because everybody was looking at their portfolios and they were down 10, 20, 30%. But isn't that realistically the best time to buy some stocks? Yes, if you know the future. The fact of the matter is we don't know if stocks are going to start moving in an upwards direction anytime soon. The way the hedge funds are moving doesn't look like they are. Let's all be honest with ourselves. Isn't that a good time to slowly accumulate your future wealth? In my personal opinion, in a lot of cases, yes. And for the first time in a long time, I'm looking at growth stocks and seeing companies that, you know, at prices where I'm willing to buy them. There was a long stretch there before this crash where I was finding it very difficult to buy stocks. And that's why I started trading a lot of penny stocks because, you know, the valuation for these long-term holds didn't make sense. And then people were asking me, why aren't I buying stocks? Why am I just trading penny stocks now? It was because something like this was to come. Now, I did not expect it to come at this kind of rate, this quickly and this devastatingly, or else I would have adjusted my portfolio accordingly. But the point stands that, you know, these hedge funds are shorting us right now, but one day they will work with us again to bring those stocks back up. The sad thing is we don't know if that's going to be this week, next week, or even this year. But if you are a long-term investor, a lot of things out there in the market right now are at beautiful prices for you. And I think we should all take a moment to just sit back and look at all of the best investors of all time. If you just go back and look at how many crashes they lived through, do you think they gave up on investing? Do you think they stopped investing during those crashes? Or do you think they doubled down? I think I know my answer. So that's my plan, is to start slowly but surely accumulating stocks again, with the understanding that I personally believe a lot of these stocks have room to go lower. But I also have the understanding that it could happen at the snap of a fingers, that the big money and the hedge funds decide, you know what, let's bring growth back up. And I don't want to miss that ride. But anyway, my friends, that's my thoughts on what is going on right here. I think it's very difficult to give timelines, etc., but that is what I believe is happening. If you watched this video all the way till the end and you perhaps took some value, some insight, first of all, you, my friend, are a true legend. Secondly, could I please ask you to hit that like button, drop me a comment down below, and maybe subscribe if you're new around here. Again, if you are interested in joining that private Discord group as well, that's the first link in the description. And if you like those free stocks on Webull, that's the second link. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.